Hi and welcome back to Cheeky Crypto. My name is Nick, and today guys we're going to be jumping down into the world of Ethereum, taking a look at what kind of price action has been going on and what I would expect to happen next. As I get into this video, if you do find it useful and informative, hit the like button. I really do appreciate that. If you happen to be new to the channel, then why not go ahead and subscribe, tap the bell, select all notifications, and in doing so you will be kept up to date with absolutely everything that we do here at Cheeky Crypto. If you haven't yet joined us in Discord, link is in the description down below. It's a fantastic community talking crypto 24/7. It's completely free, and I don't think you'll be disappointed by what you find down there. And we have just relaunched our podcast as well, so there's a link to that channel in the description down below. We're on Spotify, we're on Apple Podcasts, and of course we're on YouTube. By going to our Discord server, you will find everything you need to know about crypto, so why not check it out today? Link is in the description below. Okay guys, let's waste no more time. Let's get right down into this, right? Ethereum paired up with USDT. On the hourly chart, Binance is our data source. So yesterday we saw a pump to the upside. Now that pump to the upside invalidated my wave structure to the downside, which basically means that the wave structure as I showed you yesterday is no longer valid. This could be for multiple different reasons. One, I've made a mistake and I am wrong. And if that is the case, I sincerely apologize. That's not my intention here. If, however, it is a very valid wave count and we've moved on up, it could be an ending diagonal pattern instead, which is a little bit rarer, and you know, there's a couple of things we need to watch out for if that is the case. So what we're going to do is we're going to jump into this move that we were talking about yesterday, this in particular map to the downside. Now I was estimating about $808 to $852, right? Whereas the day before, so 2 days ago, we were actually talking about $837 to $897. Now we hit those lows theoretically by coming into this range. However, I wasn't happy with the structure of how this was forming to kind of call that the bottom, and that coupled with the stochastic RSI was actually indicating more room to the downside. And although we are, you know, overbought on the 4-hourly and overbought on the 8-hourly charts, let me just quickly check here. On the 4-hourly we're overbought, on the 8-hourly we're overbought, right? The daily, we're actually coming out of oversold. So we were actually looking for more room to the downside, yet we actually saw the price move up. Now that price moving up could have been because there was too many short positions, and that creates pockets of liquidity for the whales to basically just wreck retail investors, which is how these whales operate. So basically when there's when you use leverage trading, you basically have a liquidation price. Those liquidation prices kind of create a pool of liquidity where if the price was to go to it, you get liquidated, and the whales can accumulate that Ethereum or that Bitcoin without moving the price of the actual asset in a significant way. This is how they accumulate vast amounts of cryptocurrency from retail investors who are selling or getting liquidated without actually moving the price of Bitcoin or Ethereum by creating these, or by navigating the price to these pockets of liquidity. So when we understand how that works, it's important that we understand that this price moving up couldn't be complete fake. It could just be a way for whales to accumulate Ethereum whilst wrecking retail investors simultaneously. Of course, once you have a little bit of green like this, FOMO kicks in, long positions open up, and the opposite area of liquidity gets created down lower, and as a result the price can navigate down into the pocket of liquidity, liquidating more retail investors. It's a really bad game. It's a wild west, and essentially that's kind of really bad for the space. Okay, so what else is going on here that could explain this, right? So this low area that we had down here just come in on a 1.236, right? So we know this hasn't really reached the minimum requirements of what we were looking for, but what we can do, of course, is realign things a little bit. So we'll get rid of that fib. We don't need it anymore. Okay, I think we could argue that that is a wave 4 there, and this is a wave 5 here, now reflecting on it. Okay, so we end up with that. That would make this our wave 3, and all of this move up our wave 4. Now, wave 4 is not allowed to cross the lows of wave 1, okay, and therefore we would understand that this would only happen in a ending diagonal or leading diagonal pattern. Okay, so for the most part, I don't like this. So what I'm going to do is I'm going to remove it because I don't think it's actually the right structure. And what I will do is also just remove a few of these areas here as well, these fibs. We don't need those either. So when we take a look at this, we've got a 5-3-5 structure, right? That is called a zigzag, and is the correct use of an ABC. So you go A, B, and C. Therefore, that completes a corrective pattern within this fifth wave structure. But it doesn't necessarily mean that it's over or we're out of the woods just yet. We have this pattern going up here. There is no overlap to this just yet. And this is actually indicating to us that maybe it's a 5-wave structure up, which might mean a zigzag up or an impulsive structure up for Ethereum. Alternatively, it could just be a 3-wave corrective structure, and we end up with another 5-wave structure coming on down, which might actually then lead us into a giant zigzag, which would be in, if I grab hold of my other ABC, all of this being A, all of that being B, and then we pull back down into a C, still hitting those lows, but through a different structure altogether. What we want to see, if we want to see Ethereum's bottom being in here, is we want to kind of see a bit of something like this. And we grab hold of my 5-wave structure. We go 1, 2, all of that would have to be 3. This would have to be 4, and then we'd have to pull on up here. Okay, now the issue that I have with this, if I actually just expand this out for a second, just move that 3 and I'll move that 4. Here you can see that we actually have 1, 2, 3, 4, and potentially 5 coming on down. Now, there's a lot of 5-wave structures going on here, okay? Now, 5-wave structures are normally impulsive, which basically means that they're a trend-based pattern. They set a trend to the direction that they're going in, okay? So when we're having these 5-wave structures coming down, that's a trend pattern to the downside. However, when you only have 5 and you have 3 and then you have another 5 and you get the zigzag, that's a corrective pattern on a macro. Okay, it looks like a trend on the micro, but actually it's a corrective on the macro. So really important that we understand that difference. Now, when we're seeing this micro movement to the downside, this could be in a zigzag pattern again. This might be our corrective structure here, meaning that we actually end up with overlap, and then we don't have this this 5-wave structure upwards. So there's a lot of things to kind of be concerned with here, and why I don't necessarily want to say that the bottom is in when we have overbought 4 hours, overbought 8-hour stochastic RSI timeframes, and the patterns that are going up are yet to be seen as trend-based patterns. We haven't got confirmation that they're trend-based just yet. So until we actually get confirmation of these things, it's very, 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 very difficult. The other thing that's also worth noting is you have a V bottom right in here, right? We come down and we bounce right up, this kind of V shape. These also don't tend to fare too well in the space, so we should be cautious with this kind of shape as well. Some people will say it will look like a cup and handle, and you'll have this little handle pattern forming down here, and then you go to the moon that way. Our cup and handle patterns are about 60 to 70% accurate, and if they form with a V bottom here, they fail. They pretty much never work if they're a V bottom, and they need to have a nice rounded, hence they call it a cup, and a nice rounded handle, the handle of which cannot drop more than 50% of the depth of the cup. Okay, so understand the pattern there. Now, I don't like cup and handle patterns. I don't think they're the best. But again, if you follow Elliott wave theory, you can see why they form, because you have these wave structures that allow you to go down and then up and then down and then up and so forth until you get that explosive, impulsive trend-setting pattern. So we haven't got that yet. We should be cautious at this stage. Plenty of room to the downside. Now, there is one thing I've noticed on a macro scale, which is a weekly chart, that's worth noting, but I don't want to scare people unnecessarily about this, okay? What I'm going to do is I'm going to grab hold of all of these, and I'm just going to take these off of the weekly chart there, okay? And I'm going to take that one off the weekly chart as well, okay? So what we've got here is a big drop to the downside, right? And if we were to measure the distance on this weekly chart from the top to the bottom, okay, from here to there, we can see that we've hit 1.618. This means that this is actually a impulsive structure down at the moment, right? We've dropped down more than 1.618 of the measurement of our wave 1. So if I draw this in on the weekly, we have 1, 2, this being 3, there would be a 4th wave bounce, and then a potential drop down significantly lower. So forgetting what's going on with those micro movements of the hourly chart and all the different kind of 5-wave structures, 3-wave structures, 7-wave structures, or whatever, essentially on our macro scale here, we've dropped down so low now that we've hit a 1.618 move, which does indicate a potential 4th and 5th wave, and there's a high probability of this. Okay, when we hit 1.618, it's pretty much going to happen. It is that kind of level of probability. There's very little scenarios here where you hit a 1.618 on a drop like this and then move up past wave 1 before dropping down lower. Normally when you do this kind of move, you have a 4th wave bounce, a bit of a relief bounce, and then we pull back down really hard and we hit those lows somewhere between 1.236 and 1.618 of that 4th wave. So for example, if I grab hold of this entire wave 3 pattern, okay, and I put that to the top here, okay, and what I'll do is I'll remove that one. We don't need that one now. Okay, the wave 4 typically goes to the 38.2%, so 382, or as I've drawn this fib, the 618. Okay, so that would be our potential theoretical wave 4 low. And if I grab the low that we've currently set and we take that to the 4th wave, okay, and I remove that chart, here you can see, and I grab this little yellow box, we could potentially see Ethereum drop down into a 5th wave low between 633 and 777. And the only way to invalidate this structure is to take Ethereum's price higher than $2,159. So I don't want to scare anyone by kind of, putting this out there and kind of saying, that there's, huge downside. It can be invalidated under the right structure. We could move on up. This could just be a 3-wave correction. However, we should acknowledge that this pattern exists. It is right here. And as a result of that, we should be at least optimistic in the thinking that we got some room to the upside to be had here. We are looking for a bounce to the upside, but if all of those stochastic RSIs, those momentum indicators, indicate that actually we've got more room to the downside, we might want to exit positions if we did get into them ahead of any potential move to the downside from $633 to $777. Now guys, I'm not a financial advisor. I cannot give you financial advice. All I can do is give you my thoughts and opinions on the data as I see it in the charts. So if you have found this useful and informative, hit the like button. I really do appreciate that. If you happen to be new to the channel, why not go ahead and subscribe, tap the bell, select all notifications, and in doing so, you will be kept up to date with absolutely everything that we do here at Cheeky Crypto. With all that said, done and out of the way, I hope everyone has a fantastic day, and I'll catch you all in the next one.